Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon. Ira Epstein of Linn & Associates with your financial market update for this Wednesday, the 5th of July, 2017, about 4:42 p.m. Central Daylight Time. Folks, I'm back from vacation, nice and rested, and when I go away, I really don't look at the markets. I do my best to avoid them so that I get my brain set. Wouldn't have mattered what I did anyways. I was up in upper Wisconsin. Forget internet, that doesn't exist. Phone service, we'd have to go out into the middle of the lake. That was the only spot we could even get it, and it was a ball. But we stay in a place that's like an architectural digest home, so don't get me all wrong. It's just that it's really private, and we don't go up that often, so we don't turn on DirecTV and all those other services, and basically, you got to talk to each other. A bunch of guys going fishing. So as we take a look at what the markets are doing, today was the day where you got a bit of a pop finally in the tech stocks. The banking stocks are acting okay, and the reason is that the Fed notes show that the Fed wants to raise rates or wants to, and if you will, shrink their balance sheet. When, how, don't know. A number of Fed governors are for it right away. Others are saying, you know, we still don't see that inflation number. The arguments in the notes also said, you know, low employment is so low that if they don't raise rates, what happens is they'll get behind the curve. And others are saying, yeah, we keep doing that, but where is the inflation? And the Fed made note that out of the recent hikes, they're not seeing tightening happening in the lending part of the market. So it's a very mixed bag. Gold was up a little bit today, but it was up more than that. It was really up about $4 more than that late into the day. I would have thought it would have soared today off the North Korean situation. Just didn't happen. So let me get to the charts here, get my fingers taught again. You know, you go away a few days, you screw up. So what's going on? When I left, I said you have a weekly area chart that have gone from high to low as an upthrust. I can now, and will formally change this tomorrow, to say that I'm going to take this line from that high to today's low close, and I'm going to say no. We're in a down thrust and a summer correction type peak unless you at least get back over this one that was right through there, and we can call that getting over 58.12 and a quarter, okay? I've got something in my eye there. But that's what I'm thinking, and that would neutralize the down thrust. But from where you're at to get back up there, that's quite a few points. So there's some time to go here. You do have a pattern of lower highs, lower lows. When you go to the daily bar chart, which is different than the weekly, obviously, and you start looking at all this, you can see how the market has been falling down. You can see on the swing lines that you have a clear pattern of lower highs, lower lows. Now, to negate on the daily chart that pattern, you have to get back and close over 56.90.75. That'll be the key. And from here, approximately, 39.5 points, something in that area, about there. In the NASDAQ itself, the question I've had is the market going to reach down for the 100-day average or a Bollinger Band? And I don't show those here. We'll get to it on the next chart. Or is the market going to be able to not quite hit that, get back over this 56.90? But even if it does, all you do is negate the swing line bearishness. You still have resistance at 57.23, let's call it. When I look at the Bollinger Band, I come back and I said, uh-oh, and this is what I was saying to myself last night. You keep hitting this band, I don't expect more than that 100-day average. You didn't quite get there, and you got to bounce. And if you take a look at the market, it is oversold in terms of momentum. So in terms of the slow stochastic, the market got into an oversold territory that I define as a readings under 30, either of the legs that make up the slow stochastic. There's a K and D line, two different numbers, and what those numbers are saying is you're oversold, you're in a downtrend, the bias is down as well, but you've hit some targets here and you might be able to stall or bounce. If that doesn't turn out to be the case, next support 55.49, the 100-day average of closes. When you come to the SEP Dow, you've got a little different here. You've got a lower low, a higher high in a market that is caught. Do you see these black bands, the Bollinger Bands? Very, very narrow. And the flip-flop, you're overbought. You have a reading over 70, and I view any reading over 70 as overbought. I then come to the S&P, which is in a downtrend. It has neither an overbought or oversold condition. It's flat in momentum. You have a pattern of lower highs and lower lows. Therefore, I'm still in the bear camp to a degree here. And I say those lows from back here, lower highs. You certainly had the lows there. Now, could I argue that the recent break lows are higher ones? Yeah, I could. So the key to this market is getting under 24.15 or getting over 24.3650. Either of those numbers could be breakout, one to the downside, one to the upside. In the Russell, the market has been trying to go up, but fighting it is an overbought condition. As you can see, these markets, they're not in sync with each other. Each index is doing something different. You have higher lows, you had higher highs, but I could also argue that now you're starting to make lower highs. Difficult markets, no matter how I cut them, these Bollinger Bands become problems in each one of them because they're narrowing in so much. When we come over to the VIX, I left out of town. You had this monster pop to the upside, just the way we did back here. And in no time at all, it failed and went right back into these narrow Bollinger Bands. That seems to be the pattern. The VIX is a complacent index right here, not able to stretch anything to the upside. The fear index, you go higher, it's a stock market break. You're just not getting that. In the bond market, you still have a pattern of lower highs as measured by the swing line. You can see the dark lines. You are oversold. Yesterday, not today, you hit your objective, the lower Bollinger Band, and you got a bit of a bounce out of it today. As we come to the 10-year notes, we have a higher high and a lower low. No trend. Oversold. Hit its downside target, and with today's close at 125.07, the lower Bollinger Band, I believe, let me just check this, I think it's at 125, 124.31. No, it's not. It might be right under it at 125.08, and that would give you 1, 2, 3, 4. What about this close right here? 126.05. 5 days in a row under the lower Bollinger Band, which often is what the market ends doing before it moves sideways over that. Now, when I say often, most times you don't get to 5. You get to 2 or 3 and you get to the right-hand side of the Bollinger Band. This is really stretched out on the 10-year. We'll have to see what happens, and it's going to get a lot more play. We start getting employment data tomorrow and then the government report on Friday to give us an idea of where we're at on employment. Most people think employment's doing good. I was out in the country talking to people that the guys I went with, some employ quite a few people. I'm talking in the hundreds, one of them in the many thousands. And getting help is not the easiest thing that they're going with. Now, I can't go by my friend that does the thousands because their company's literally in South America, Europe, and in the U.S. My other friend owns a meat packing plant that they specialize in ribs, the ones you eat in stores, at restaurants primarily. Top end, just they do one cut, and it's phenomenal. Big business. But I said, how the line's going, and I was over there when we got, in fact, yesterday, today, so Monday, when we got home, I went there Monday, had to pick up some for the holiday. And he was telling me it's very hard to hire people, and they pay more than the norm, and unions and all that. It's very difficult to get help. So we'll see what the employment numbers do. Is that how it's going to be? I also saw a lot of help wanted signs in different places. So probably, but no inflation. And if you're looking at gasoline, I can only tell you how low gasoline is. It's unbelievable. But 5 days could mean a bounce to the right-hand side, but not necessarily a change of the overall projection or trajectory of the market really to the downside. We get to a higher high, a lower low in the dollar index. The market is correcting, in the process of correcting an oversold condition. It really got hit hard, and I would expect to see resistance if it can continue the rally about 50 higher, around 96.55. The flip-flop of that is the euro currency, which got very overbought, spent a couple of days over the upper Bollinger Band, and now it's correcting, and it has more work to do to finish itself off right here. In the British pound, well, how's Brexit going to go? What I did read when I came home is, there's a lot of talk that Mr. Carney was, of course, saying, as Mr. Draghi did just before I left, about interest rates are going to go up. Now they're starting to get softer data, and there's a lot of articles that are now saying, no, that's not going to be the case right away. They've got to get through their Brexit, and as they do, they can't have a higher rate to support that. So, interesting. We'll see just what happens there. The yen maintains its overall bearish bias because of the embedded reading that's very bearish, and it's just riding that lower Bollinger Band. Everything about this chart is very bearish as I see it. We then get to the crude oil, and the numbers today out of API were stellar. This is all the bounce you got off the low. You got as low as 44.51, and you're only able to close 60.70 over it. Not good performance. Notice where the market stopped. The Bollinger top was 47.37. You got as high as 32, and you fall right back to the 18-day average. So the pros in that area apparently took some money off the table. We have to wait for the EIA numbers in the morning to see how they match up, and they are not looking. I just looked at the estimates. They aren't even half the amount that they got in the draw on crude oil stocks. I think they got 5.5 million draw on the API. I think they're looking for 2.25. That's not very good. What's killing the market is Russia today also came out and said it is not going to continue on after this extension with production cuts, nor would it go for a deeper cut during these at this point. That isn't good. And then the next piece of news that came out intraday was that OPEC exports of oil, not production, exports have picked up. So you can stop or cut back your production, but if you're selling the same amount or large amounts out of your stocks, yeah, maybe your stocks get depleted, but what does that do for the guy out there? He's still getting the oil he wants, and the market's being flooded, and you're into the $40 plus area. Gasoline, well, you had your bounces I thought you would get going into the July 4th holiday, and that was that. Now you got to be careful what happens next. And if, it's normal summer travel from this point, and the weather is just so perfectly mild. In most of the Midwest and East Coast, you're not getting that big demand for nat gas. The West Coast is different. We know the heat. We know the severe weather that they're getting, droughts even in the Dakotas. But look at how that just keeps putting that market down. The boards, they're clear because they're going to start trading soon. And that brings me to something that I want for you. Look at the categories here. As we take a look at these markets, we write about them. Now, these grain reports that just set everything up, a lot of people get our market research, and they only get it for a limited time. If you have a trading account with this, or you buy my school and you're getting the research from me during that, or you're subscribing to my research, I include that. Tell me that grain information hasn't been phenomenal to read. I mean, that's what it's about. Now it's going to become energy information that you're going to want to know about as well. That's going to become front and center. Of course, financial data information with all of the data on employment we're going to get tomorrow and the day after. You want to see what we're saying about it. So how do you get it? And by the way, you can choose the categories you want. You don't have to take every category. We allow you to pick and choose. Well, you get it by giving us a call at 866-973-2077. You can go to our website and you'll see a carousel of free offers right here at www.iraepstein.com. You can click up here. If you're watching me on YouTube, there'll be an icon. The form will appear. Choose what you'd like. Or under us on many websites it says, click here for Ira's free offers. Do so. We'll take care of it for you. I'm Ira Epstein. You have a great trading day.